In this little mini series, I'm going to share with you how I get a slight edge in the markets, or one of the edges that I use when I go through and do my daily technical analysis before my trading session in the morning. All right, and what I'm talking about here is in this video, you're going to learn about how to find the average range a specific currency pair may move in a day. Now, how I apply this, I'm going to share it with you in the video, how it works off of my key levels, and then how I can project how far a price may or may not move in a particular day. Now, I'm not a financial advisor, and this is not financial advice. Trading is risky, you can lose all of your capital. I'm sharing this with you here simply for educational purposes. I don't make any guarantees or promises or anything whatsoever. So if you like what you see here in the video, I do also have a free Telegram group where I'm sharing a lot of my trade analysis. That link's in the description below. Now I'm going to show you how I use this in the market as an added component to help make my trading decisions. Welcome back. In this video here, I'm going to begin getting into how far price may move on a given day for any specific pair. Now, it doesn't matter if you're trading Euro USD, GBP, JPY, whatever the case may be. What I'm going to share with you here is what I personally use to determine how far price may move in any given day. And I'm going to do it through using average true range and then coming up with how many pips the price may move from its opening price, so that it helps me determine where price may start stalling out or reverse. And if that's coupled with critical levels or key levels or zones, then it ends up giving me a pretty good idea of where I may want to decide to get involved in the market. So up here on my screen here, I'm going to walk you through how I use this tool, and how I use average true range, and understanding how far price may move in a given day helps me as a trader find really good setups here. All right, so on my screen I have the Euro USD pulled up. It is on the daily right now, and I'm going to pull up a simple indicator that I only use to find the average true range. Now, this will also help you understand the current market conditions, because price is not always the same every single day. All right, there are periods, whether it be days, weeks, or even months at a time, where market conditions are different and where market volatility may be picking up, increasing, or again decreasing here. So understanding these types of market conditions, or utilizing this tool to find your average true range, or to find how far a price may move in a given day, will help you understand what type of current market conditions you are in. And then you should be able to apply this to whatever system you're using, or whatever you might be doing currently in your trading, or even following along in my course where I talk about drawing up key levels, and then of course finding those other areas of confluence. So let's get into it now here. So I have, again, the daily chart pulled up here on the Euro USD, and the pair doesn't really matter. I just like trading this because I've been trading it for quite a while. I understand how it moves, and I really understand how it reacts in certain situations in the market here. So all you have to do is go up to your indicators tab here, and there's type in average true range. And this indicator comes up right here. You pop it up on your charts, and here's how I use it to find out, or at least find these areas where price may end up moving, or how far it may move in a given day. So down here at the bottom of my screen, you're going to see some numbers here. Over to the right, you'll see 0.00743 right now where I have my cursor. What that means is that right here on this chart here, if I were to draw a line right here, okay, where this is crossing, this is about 0.0735. That means in this particular area right here, all right, the average range from price's opening point, meaning at 5 p.m. Eastern after the swap, or I'm sorry, 6 p.m. Eastern when the market opens back up, that means that Euro USD's average true range, or it has the potential, historically speaking, that it may move approximately 73 pips for that given day. All right, now I'm going to share with you how you can apply this information and finding this average over the course of a month to 3 months to understand what kind of market we're in and how much volatility there may be, so that you can make better decisions on where or how far price may end up moving on a given day. So let me go ahead and get into it now here. Let's go ahead and zoom in here. Well, actually, I'm going to zoom out because I want you to see this here. So how much data do I need? Well, I'm going to put a vertical line here at present day. It's the weekend, so the market is not open. And then I'm going to go back. You know, this is subjective. It really doesn't matter. 3 months, 4 months, what the case may be. I'm going to put that there. And then all I'm going to do is zoom into that area. Okay, I'm going to zoom in down here at the bottom. Make it a little larger and just zoom in a bit here so I can find that average here. Okay, right here. I'll just draw a vertical line, and it doesn't have to be exact. Okay, I'll draw a horizontal line right here, right in the middle where all these are touching. That gives me about 0.00730. So I know right now when I'm looking at the market and I'm setting up my trade setups in the morning because I trade the New York Open, I know that on average, historically speaking and statistically speaking, your USD may move approximately 73 pips in that day from its opening price, all right, for that day. So now let me get into what I mean by that. All right, so let's go ahead and take a look here. So I'm going to pick any one of these daily candles. And again, this doesn't mean that I'm trading the daily, but using the daily is going to help me find that distance that price may move. So I'm going to start there. All right. I do like to trade. I actually trade on the lower time frames, New York Open, but I also use this to find my daily ranges here. All right. So let's go ahead and take a look at one particular candle. And I'm going to pull out my measurement tool over here. So we'll find the price range. All right. So that means that when price on this candle, I'll zoom way into it here. So I'm going to look at this big, giant red candle, and I'll circle it so you can see what I'm looking at here. A little squiggly line. There we go. All right, and then I'm going to go back to the price range here, and I'm going to look at the open of this candle. So this candle opened right here. We'll do a horizontal line. All right, right there. That was the opening price of this candle, and this was the closing price of this candle, right down here at the bottom. All right. For those of you that don't know, the opening price is right with opening price on a bearish candle is right here at the top of the body. This is the body of the candle. And then when it closes here, the body is the close the following day. All right. And same thing on a bullish candle, which is blue, the opening price would be down here at the bottom of the body for that day. And the closing price is at the top of this body candle for the day. All right. So the range, this entire candle for this day, price moved this far. So how far was that here? All right, let's take a look. If we start here at the opening of this candle down to the close, you can see price moved about 90 pips that day. Now remember, I said our average was about 73 pips. So it doesn't mean that I'm going to expect price to move a maximum of 73 pips every single day. It's an average. All right, some days it can move 100. Some days it may only move 50. If I have an idea using my key levels, when I see price getting up into those areas and it has already moved about 70 or 80 pips, I might be thinking, oh, price might be getting ready to turn around here or have some kind of reaction. So that's how big this one particular candle is. Let me just take a look at another one here. Price, we can take a look at a smaller one. This one right here, for example, in this particular day, moved about 48 pips. All right. So generally speaking, I like to find a range of that average. All right, so if our average is 73, then in my mind, I'm thinking, okay, price may move about maybe 50 to as much as about 90 pips in a day. All right, so I have that in my brain when I'm looking up and drawing my key levels for the particular day. And I'll go ahead and get into how I use this knowledge, all right, of average true range in helping me make my trading decisions here in just a minute. So that's all you need to find the true range, right? Once you know that, you can then just kind of make a note of it when you go through your trading plan for that given day, week, or whatever the case may be. All right, but let me zoom out and show you why I do this. So if you look at the average true range here, let me just blow this up here at the bottom. All right, this right here are current market conditions from August 2023 to present day, December 2023. All right, they are dramatically different if you go back and you look here just a few months ago or even just a year ago. If I were to look at this block of time right here, let's get our vertical line. If I were to look here to here, all right, our average true range or our average range that price is moving in this time period for this block of time here, which was probably about 5 to 6 months, give or take, the Euro USD was a lot more volatile in that time here. So the average true range or the average range price was moving in a day was about 0.0113 or approximately 113 pips on any given day. So again, knowing that, when I see price shooting up and it's only moved about 50 pips, I'm really not looking for any specific setups because I know that price could probably move 120 pips that day, maybe 80 pips. So knowing this again here helps me kind of make those better decisions in my trading. Now, let me show you how I use this in practice. All right, so let's go over to some setups that I had this past week here. All right, so all right, remember, I'm going to put it up here in giant letters here. Let me just clear off all of the drawings here so you can see that. And now that we know what the average true range is, I don't even need the indicator up anymore. I'll remove that off the chart, so we just have completely naked charts now. All right, now that I know that my average true range is 73, so I'm going to put that up here in my chart. I'm going to just put 73 is the average true range, or the distance or the number of pips price might move in a single day. Now I'm going to drop down to the 1 hour. I'm going to get into drawing my key levels. I'm going to mark up the opening, and then I'm going to mark up the opening price and the closing price so that we have those marked off on the charts here. So let me drop down to the 1 hour and then get into some key levels here. And then I'm going to make this a lot larger too, so we can see that here, so that we don't forget that this here, we don't forget that this here is the distance that price has moved. So let me just see if we can change that here. Maybe like a 28. Let's go with a 32. All right, that looks pretty good. So we're on the 1 hour. I'm going to move this over here. All right, and I am going to use some bar replay because I'm going to show you the setups I was looking at and some setups I actually took in the market here. And I'm just going to make it really simple to understand, because really you don't need a whole lot to trade. I mean, price either goes up or down, and then if you have some added confluences, you understand these key levels, then it could potentially help you make better trading decisions again here. So 73 is our number, and I'm going to draw up some key levels. So let me go back to just this past Friday. I'll use the bar replay tool to go back here to about, we'll go back to about 7 o'clock in the morning here when I was looking at the market here, and I'll pull the 73 down here. So the first thing I want to do is I want to understand where was the opening price on the day before Friday, so Thursday. So let's go back to, so that for me is going to be about at 1800, which is 6 p.m. Eastern after the swap when the market opens back up. That is going to be my opening price, so I'm going to mark that off now as a horizontal ray, just so I can see that here. All right, and then I'm going to label this here now as we'll just say this is the opening price. Okay, and that is there. Let's just make that a bit smaller here. Okay, now that we know that this is the opening price and this is the current time, I'm looking at the market, which is right here. All right, and I know that, again, using that average true range, 73 pips is the distance that price may go today on average, right? And if I draw this horizontal ray up, it looks like price moved about 46 pips that way. And it looks like price could potentially go from this point. Let's just go down to 70. Okay, we'll make these right around the average here. So price could potentially move approximately 73 pips this way. All right. So if I'm sitting here in the market right now and it's 6 a.m. in the morning, I'm going to move this candle over a few more ticks here because I'm actually looking at it about 8 o'clock or 9. All right. Right. What time is that? 8. There we go. So if I'm sitting here and I know this is the opening price, I'm very aware in my mind that, okay, price could possibly move all the way down to this area today, or price could possibly move from this point, from this line up to here, all right, or it could possibly come down all the way to here, all right. Now, it doesn't mean that it will, but knowing this information and then coupling it with key levels gives me a pretty good idea of, you know, if it does get that far, where it may end up stalling out or potentially have some kind of reaction. All right. So on this particular day here, I had a couple key levels drawn up. I had one drawn up right here in this area. And I'm not going to get into key levels in this particular video, but I'm just going to put them on the chart so you can understand what I was looking at here. All right. So in this area, let's see, there is a key level right about here, right about in this area, and that's just simply support becoming resistance. All right, and I might end up moving that up there. All right, then I had one more key level drawn up a little lower, and it was right about here. After this big wick, let's go over one more candle bar. All right, because my trading session for me at New York Open starts after 10 o'clock, after all the news. So I saw this big candle push down, so then I had another key level. I had one drawn up right here in this area here. Okay, so I'm going to mark this off now. I'm just going to use some text here, and I'll just say key level so that we can see that a bit clearer. So this is a key level. This is opening price. All right, and if I zoom out again, these are the possible ranges or how far price may move. You can see it came right down here. It didn't quite get that far, but again, it's just an average, right? So how far did it actually come? It came about 42 pips from a previous day's opening price. We'll move it back to 73. All right. So on this particular day, I was actually looking at short positions right out of this area. I was looking at this price to come up and reject and then head down and possibly take out these lows down here even further. And then, of course, I wasn't, after this candle happened, I really wasn't interested or didn't really think price was going to come up too much higher than this particular level, and it didn't. Now, I didn't take a trade on this particular day. There was a setup, but it wasn't exactly what I was looking for, so I decided to sit out that particular day. All right, so as we go forward in time here, you can see tick by tick, price did come up. It tagged right off my key level there, and then, of course, it came over here, and this is where it ended. All right. Now, what I was looking here for is knowing that price can move this far. I was comfortable with that key level for price to possibly come up and then push all the way down here. And I still believe that price may end up doing that, but only time will tell. So let's come back to another day to see how I use this again in my trading setups. Again, it's just one tool that I use so that when price is really overextended, I have a better idea if it's approaching those key level areas here. So let's go to the previous day here, and I'll just mark up again on the charts. We'll go over to about 1800, which is 6 p.m. Eastern here. So this was, and I'll remove some of these lines here. Let's just use this as our opening price. So there's the opening price for the day. And then I'll take this over here. We'll get rid of this one. We'll get rid of this one here, and we'll just take a look at the range here. So here is the range, all right? And on this particular day, you can see, let me drag it over. Can we drag this over here? There we go. On this particular day, from the opening price, which is right here, okay, price comes down literally almost to its average of 73 pips, and then has a reaction come back up. All right, and then a continuation on downward here. So what I want to share with you here is once I get these lines off the chart here, I want to look left now and see if there are any key areas here, and look at that. All right, so this is how I draw my key levels. Again, I'm looking for, this was resistance. So I'm looking for price to come back down in this area because it may now become support. And if this comes all the way over here, all right, I did have a key level in this area on this particular day. So we'll just mark it up. So in this area, I'm looking for a nice even number. So 17, so 07550. It's about where I had that. All right, I'm going to move this. Oops, I didn't want to do that. Let's just put it back on there. 1750 it was. And I'm going to move this key level now to here. All right, I'll move this opening price to here. I'll move the 73 to here for this particular day. And we can see what time this was here. My trading session starts just after 10 in the morning, which is right there. And yeah, so I knew when price was down here in this area, okay, and I had a key level down here, that provides an extra area of confluence and confidence. All right, meaning if price comes all the way down here and we're at that 73 pips, we're at its average true range, or how far the Euro USD is moving that day, and it's near a key level, and I find another confluence in this area to take a trade for a position, for a long position here, everything lines up for me. All right, because we know that the Euro USD, statistically speaking, okay, over the last 3 or 4 months, it's likely not going to move much further beyond 70, maybe 80, 90 pips in a given day, and it's already there. All right, by the time we get to the afternoon, all right, Eastern Standard Time afternoon, and then, I'm looking for a decent setup, and I'm really comfortable with taking a position like that here. All right, because I understand how far price may move in a particular day on this specific pair, Euro USD. So let me back up and let's do another day here. And they're not always going to be this perfect. You have to understand that. They're not always going to be this perfect, but it's just one tool in my arsenal that I do use to help me make better trading decisions when I'm looking at the market here. So let me clear, let me leave one line on. Actually, let me just clear, we're going to clear a couple things off here. All right, let's go back to the next day here. And I'm going to go to 1800 again. So this is, okay, so this is opening price. We'll move this here. This is opening price right here. Okay. I'm going to move the opening price here. We're going to move our 73 here. All right. And then we're going to move the range. And we're going to measure this. All right. We're going to measure this range right here. All right. And I'm going to just get rid of all these lines over here, because if I leave them on here, it looks like I'm just chicken scratching everywhere. So I'm going to remove them. All right. And I'm going to bring this over here in case I need it. All right. We didn't know about this. So I'm actually going to bar replay this back just so we can take a look at it. We'll come up to about 9 o'clock in the morning on this day. All right. And we don't know what's going to happen here yet. So let me just remove this measurement to out of the way here. All right, so this is opening price, the red line. All right, it's also a key area, a key level for me. I can just see it from right here because I have support, rejection, rejection, rejection. So I'm considering this a key area, this opening price. All right, I can already tell you that right away. Now, let's just look left here. There's a low right here. I'll mark it off. It's a horizontal ray right there. And I'm just going to label that as, we'll just call it low. Okay, just so I'm aware. There's a low down here. All right, looking left. All right, there is this rejection. All right, so just from a levels standpoint, if I bring this over here, it wicked off of that low. All right, so there may be a key level right there. Now, I can tell you right away, I don't like it when price is rejecting multiple times here and then it's coming down and revisiting again, because it's only going to reject off this level so many times before it breaks or has a higher probability of breaking. Now, what I do know is when I'm looking at this here is that price has already moved. We'll measure this from this point here. Price has already moved right here about 34 pips. So when I'm looking at the market here, I look at this and I say, okay, there's a low here. The average true range is 73. All right. And I'm looking at this here. It moved 34 pips already. How much further down to that low is it? Well, let's measure it right here. It is approximately another 22 pips. Well, that's about 50 some pips. So can price go further than this? Because we know that the average true range is about 73. All right. And we'll just draw that up here. We'll drop this down to 73. So yeah, if price cracks down here, we could come down a little further if it cracks that level. All right. So this is a low, and it is also a key area. So as price approaches down, you can see that when I got to this area and price blew right through it, look at this, 81 pips. All right. So given what we know, right? Given that I'm looking left, and I had said that this here is rejecting, it's rejecting, rejects here, it's rejected 4 times. Do I really think it's going to reject a 5th time? And if it doesn't reject, how far is it going to come down? Well, there's a measurement right there, 86 pips. And then you can see that it comes down here, it gets a little exhausted, and then it has a bit of a retracement here to end up continuing down. Now, in that area here, in this particular area, if there were a key level down there, all right, then that's a possible area of interest for me. All right, so this is how I use it. Now, looking left, there was nothing here, okay? So I didn't do anything on this day because it's just a big imbalance bar over here, or just a big giant bar, whatever you want to call it here. All right, but there was some kind of reaction, and look at that, 81 pips here. All right, let's do one more. I'll go back to the previous day here. We'll go back to this day now. We'll come back again here we'll do the 1800 for 6 p.m. So price is about the same area, so I'll just move up here. We'll bring the opening price here. We'll bring our 73 here now, and we'll just get rid of some of this stuff over here because we don't need it. We will move our tool over, and then I'll just clean this up a bit here. I'll move that, the low, we'll take this off of here. And the key level, we don't need it yet. Let's just clear this out. Let's just clear this out now and get some of this stuff off of here. Okay, so here's the opening price on this particular day, the red line. And again, we have our 73 up here representing the range that price can move. And then key level, we don't need it yet here. All right, so I begin trading again around 10 a.m. in the morning. So that would be Eastern Standard Time. That's right here. All right, I am going to bar replay this back. Let's get rid of this mode here, and we'll come back to it real quick. And I am going to bar replay this back to just before 10 a.m. here. So if I'm looking at the market on this particular day here, and I know this is the opening price, I'm telling myself right now that based on what's happening here, okay, 7 o'clock in the morning over one candle, all right, 8 o'clock and 9 o'clock, all right. I don't start trading until 10, so this is where I'd be. And I'm looking at this range here, and I'm telling myself a couple things here. First and foremost, I see that a level has broken right here. So I'll put a level here, this. So this would be a key level for me right in this area somewhere. The reason, price reject it right here, all right, and reject it here, and then reject it here. Okay, so that would be a key level for me. Meaning if price came back up to it, if I had all my other confluences met and I was within my trading session, then I might take some kind of action there or look to get involved in the market. All right, so what do I know? Well, I know from opening price down to approximately 73 pips, which is right about here, that's how far price may come down today. If I look all the way to the left, all right, there is a key level again right here because of these wicks in this area. All right. And I will just go ahead and just put that on another text, put some text in here as well. Key level here. So right now, because I'm understanding my key levels, all right, and I understand how far price may move given its historic daily statistical range, that if it's approaching here and it's moved approximately at this point in time, 51 pips, all right, if it gets down to that key level, all right, it's probably not going to go too much further, depending if it really cracks. All right, now if it comes down here and it cracks with momentum, then it may end up going a little bit beyond to that upper range of the average, which could be 90 or 100 pips. All right, so let me just go over one more bar here, and you can see it comes really close to that key level and has a reaction right there. So again, that was 64 pips. You see that? Again, the 73 right here, the 73, it's just an average. It means that it could go 90 in the day. It could go only 40 or 50 in a day. But as long as we have that average and we're around it and then we're in that key area, all right, and I have my confluences met, then it could potentially be a setup for me, depending on other confluences again here. But now are you starting to see how understanding the range for any particular pair can help you understand the current market conditions and how far price may go up or down from its opening price on any given day. Knowing this information helps me make better decisions in terms of where I think price may be stalling, where it may have a reaction, and looking for those possible positions if everything lines up and my confluences are met and I'm comfortable with accepting the risk during that specific time.